Hey guys, what's going on? It's Leo. So today we're going to be taking a look at Cardano ADA against the US dollar on the daily chart. So first thing I want to do is I want to jump back to an older video that I had done. I believe this was the last video I have done on ADA, and I'm just going to show you all where we were and now where we are. So as you can see here, so we pulled our measured move from the peak here up to the high. We can see the price pulled back. They started to buy in between the 50, which is that red line, and the golden zone, the 618, and now price has moved off. Their first target here is going to be the negative 236, right where that green box is. So let's see where we are now relative to that. Oh, look, we've gone right to it. So what that looks like here is, I pull my measured move, right, pulling from high to high. You see that it's come down to the golden zone. It's run right up to the negative 236. It's going to be a green horizontal line there. And look at that. You went exactly to target, and then they reacted off of it. These algos that I talk about, they are so prevalent in these markets. It's hilarious because you'll see it go to the price exactly to the tick before it turns around. So it's interesting. And so now, where are we big picture? Where are we going? Well, first thing I want to do is I want to put up a little bit of market geometry. It gives the price a little bit of structure. So we're going to put on the pitchfork here. Now, first thing that you'll notice is how well the Andrews pitchfork is containing the price. So, for example, here, you can see how it goes up to that parallel. The parallel is going to be the dotted line here. You can see how it touches. It's contained very nicely within that upper parallel. You can see how it support, gets through, goes down to another parallel and reverses. So that's what I like to look for whenever I'm using these Andrew pitchforks. There's lots of confluence in the sense that the price is respecting the pitchfork. If I put on a pitchfork and it looks something like this, let's use an original, let's see. Leaving that one's a little bit. Okay, there we go. So you can see that doesn't really fit price action all that well. So I don't want to use that one. I want to use one that's containing price the best, which I believe it was modified shift. Okay. So now that we have a little bit of price structure that we can work off of, something else I want to consider is the Bitcoin chart that I talked about a couple of days ago. Based on that chart, if we think that the market is going to top out end of January, well, that gives us a time frame, right? So that gives us a time dimension of this analysis as to when we would get to that target. We have the market structure, the market geometry, which gives us an idea. It gives us a trajectory, a slope as to when we'll get there of what's possible, meaning that, this is the low side of what's possible, and then we have the high side of what's possible. So now we can take a look at the Elliott wave dimension of it. Well, what we see is we see a 1, 2 very clearly. We see a 3 and a 4. What's interesting about this count here, the fourth wave of the higher degree retraced around the same area as the fourth wave of the lower degree, which is very common. You look for that in Elliott wave. So now what this looks like to me is that we put in a 1, 2 of some kind. Whether it's done, I don't know. I'm more focused on the big picture right now. But what we can do is we can pull up, see what the algos are doing here. So we just pull from the low where we had prior algo buy action to the high. And look at that. They're just bouncing. They're just loading up their orders there on that 50. Now, it still might come down to the golden zone. You also have the 200 EMA there. So there's confluence before going up for a third wave. Okay, so what would that look like? I'm going to go ahead and delete this little box here. We don't really need that anymore. So what you would do for a third wave, we know in Elliott wave that the most likely extension would be 162% the length of your first wave. So that would imply that it's an extended third wave. Okay, so that's going to give us a third wave target of $5.46. So that brings you to the 1618 I just ran up to 162% for simplicity. So you'd have a 1, 2, get a 3, some sort of a 4, and then a 5 up higher. I need to drop that to sudden mute, change the color. What? Oops, didn't mean to do that. That was there for now. Okay, so hopefully, well, you still can't really see that with the black background. I need to. There we go. Okay, so hopefully you can get an idea of where I'm going with this, right? And why I'm thinking that this is the path that we're on. Because I don't think the top is in yet, because if we're looking at Bitcoin topping out around end of January, well, we still have time for this crypto bull market. Once Bitcoin decides it's over, then the market's, it's done. It's going to retrace into a bear market. That's just how it goes. Big Daddy Bitcoin comes in, he beats all the kids, and then he they all do what he wants them to do. So, Big Daddy Bitcoin goes up. I think that these the altcoins are going to continue with him. So I don't think this run is done yet. So now what's the target? Where are we going? So we know that it's going to go up to about $5, and we'll call it $5.50 for a third wave here. So I am going to delete that because this is starting to get a little bit cluttered. Okay, I'm going to go ahead and delete this one too. Delete this one. All right, so now real simply, I'm just going to measure off the first wave here. Just this. It's on the logarithmic scale. So the most likely target whenever your third wave is extended, what an extension is, if it goes to 162%, that's an extended wave because it's longer than the first wave. So for example, if the first wave is 100% and then you get another wave that's 100%, that's not an extended wave because they're matching, right? That's a measured move basically. But if you get one that's overextended, like 162%, then you typically aren't going to have another extended move in the fifth. You certainly can. It's just that probabilities say that you're not likely to. And so as a trader, as an investor, you always want to be looking at probabilities. So what you would do is you would measure the length of the first, or measure the length of your wave here, the first that's not overextended, and you would project it from the 4, right? Okay, so 100% move there would get you up to $10. So that is going to be my target for this cycle of ADA. I think it's very possible to get there. Let's see here. I'll pop up a little Confluent box for you. And I think we'll get there sometime around January. That pretty much covers everything there is to talk about on ADA. If you have any questions, feel free to drop them below. I guess I'll do that in the other video. If you have any questions, please drop them below. Like, subscribe, share, all those good things. And I'll talk to y'all soon. Thanks.